But listen, I picked stock of the day, Monadelphous. It has secured what it calls a major contract with LionTown Resources. It's a $100 million contract set over a 9-month period that will see the engineering and construction company begin a critical path for wet plant on LionTown's flagship Kathleen Valley lithium project. Just a reminder, earlier this week, the company got a buy recommendation from Citi. And so, what do our panelists say? Is it a buy? Is it a hold? Is it a sell? Daniel, I'll start with you on this one because, yeah, it just seems like the headline, major contract secured, has popped up in a lot of ASX announcements from Monadelphous as of late. What do you make of the company?
Yeah, so certainly it's in a great environment. The business obviously has transformed over the last probably 10, 15 years. Used to be more construction work. Now it is kind of more diversified in engineering options and more maintenance and services work as well, which is higher margin. It's more recurring. They're the better contracts to win. So this contract, probably going to be, as you'd expect, that lower margin construction development work at Kathleen Valley, and hence, the share price hasn't really reacted too aggressively today. For a company of Monadelphous' size and the work it does, probably wouldn't consider it a major contract, but certainly does help in the pipeline. I think expectations for that have been built in though, Nadine. The stock's obviously, done relatively well over the past year or two. If we look at one thematic from miners this reporting season was that CapEx budgets were well above expected, and going forward, it looks like that's going to be the case. So you'd expect Monadelphous to benefit. But we probably think that's in the price already. I think there's other opportunities out there in adjacent sectors, particularly in some of the small caps, look relatively interesting. So, we'd be happy to give this one a bit of a miss or an avoid. I think there's other opportunities to play the space, but certainly can see the value proposition here going forward with those CapEx budgets.
Well, like what? Okay, you don't get to come on and talk about small caps and adjacent or doing similar things and not mention at least one name.
Yeah, look, I think one that had a great report, and it's had a few years of good reporting now, is XRF Scientific. And, it's not so much in the construction space, but they offer consumables and capital equipment more in the exploration and test analysis, the core logging analysis there. And it looks like they've been able to grow, obviously exploration's been a tailwind for them, but market share gains and price rises through the consumables segment looks quite attractive. And the company's rightly had a pretty big re-rate here, but we still think that's a lot more of an interesting opportunity than something, say, Monadelphous, which really, Nadine, it's the default way to play the sector. If you talk to a fundy, if they want to play the sector, they'll buy Monadelphous. So it can be a bit of that crowded trade.
Thank you, Daniel. Rudi, crowded trade in the price. How do you rate Monadelphous? The brokers, Macquarie recently upgraded it to outperform. We mentioned that buy from Citi, otherwise pretty neutral.
I'm not as negative as Daniel is, but I agree that the reason why the share price has performed quite well over the past few weeks is that if August brought one message to investors, is that sector is probably looking towards more contracts coming. It's an extremely cyclical sector. If there's one sector to pinpoint at the stock exchange that has had a lot of disasters over the past years, apart from retail, it is this sector. It's the contractors. Some of them actually do go out of business, which share price is worth nothing. But out of August, this is one of the sectors that analysts are looking towards, and it's not what it's in the numbers right now, it's what will be in the numbers by this time next year and maybe in 25. So contracts are being rewarded. The reason why the larger players play Monadelphous is because it's sort of regarded as the leader of the pack. If there are contracts out there, it's always being seen as it will get its share at the very least. And so those contracts will come its way. Like today we had one not that long ago as well. And if you own the stock today, you're obviously counting on the fact there will be more. And that's why you own the stock. So that's why I'm not as negative as Daniel is. Having said so, I did, after reporting season, have a good look at the sector. And there's many other shares where there's nothing priced in terms of contracts. So analysts and investors are obviously not that confident But that means that if a contract falls their way, then share price response can be quite violent. Then it can be quite massive. So I guess it all depends on your risk appetite now and on how well you know the subsequent companies, because there's easily 24, maybe 36 companies that fall in this sector. And they're all predominantly of smaller size. If you want to go bigger sized, I think Worley is on many people's wish list.
Worley?
Worley, yes. Admittedly, more energy and energy transition oriented, but still similar sector. And of course, Seven.
Seven Group, yeah.
Man, it's not quite the same. It's not a pure play, but it's a much larger company, and it's the same thematic. I mean, it's basically the resources industries spending money, and it comes their way.
But for good old MND, Monadelphous, you'd be holding it, not taking profits, because of that pipeline that you're talking about going forward. Thank you. Thanks, guys.